All right. Okay. Welcome, guys. I hope you guys are having a good weekend so far, and I hope last week trading was successful for most of you, and you guys profited from the last week's trade. So, on a quick note, there's a few things I want to touch on. So, last week we looked at trades to have last week. So, for the guys that were not here last week, this was the analysis for last week, if I'm not mistaken. We're meant to short gold, sell gold, collect about 400 pips, exit on the 2nd of March. And, these are the criteria you have in terms of take profit 1, take profit 2, and take profit 3. And then these are just the other trades that also aligned last week. These are my own personal trades that I had last week. So I had Euro, JPY, USD, JPY, and all of that stuff. And I did post my results on Telegram in regards to the trades that I had. And also I try to give more trades because last week I did not foresee the war coming. Literally, I didn't know that the war was going to happen. So on that day, gold did a madness. Okay, so if we go back, I just want to do a quick recap on last week. So we're meant to go into we're meant to go into the trade, the short trade for gold. Ideally, you can see gold is actually shorting at the moment. It's going down. But on the 24th, guess what happened? Gold went all the way up about 638 pips. Now, I did not foresee this. There was no way I could foresee that coming because, Russia just came out of the blue and then declared war on Ukraine, which is totally, it's not fair and it's not right. Sorry?
I said that was a surprise for everybody.
Yeah, basically, Aslan, it was a total surprise. Like, I wasn't expecting that at all. But I actually like the way certain governments reacted, to that situation, because Russia literally put it forward that, look, if you interfere, we're going to blow you guys up too with them. So, most of the other government didn't want to, they don't want to escalate it too much. Nobody want to start a third world war, because if we have a third world war right now, World War IV would probably be fought by sticks and stones, So nobody wants to die, and nobody wants to go to war. I don't think anyway. So long story short, that happened, and a lot of people are evacuating the people away from Ukraine. Actually, funny enough, I saw India actually flew their plane into Ukraine during the war season and try to get people out of the country, and that's literally a very responsible government. That's what they're meant to do, and that's literally beautiful. I just like that I can see certain governments actually taking care of their own citizens and trying to get the people out. But what I like the most is the president of Ukraine, the way he stood up and then literally stood his ground and didn't decide to leave, even though America actually offered him they offered him the option to leave the country, but he said he doesn't need a riot. He needs ammunition, to need weapons to fight these guys. So, which is good. And the Ukrainian people as well, like, man, they're coming all out, with their own, with their own fight, and they're keeping their ground. So it's something courageous for those guys, and I literally commend them. So that being said, let's go back to trading. So we didn't foresee the gold move this coming. There was no way I could see that. I'm not in military, so I have no clue about what happens. But this proves one simple fact, in which is when there is war, gold will always go up. This happened during Trump time as well. I think about a few years ago when we used to trade as well, and when Trump was talking about war and when he blew up some people from the airport and all of that stuff, gold went all the way up, and we see that pattern consistent. So one thing that you should know today is whenever there's a threat to global economy, whenever there is war coming, gold will always go up. So you know that whenever there is a massive threat happening in the world, the first thing you should do is probably buy gold. Right now, keep in mind, we had the analysis of the COT report showing that there's a lot of selling power coming into gold, and there's also the seasonality from the COT report showing a lot of selling power and then seasonality, a lot of selling power and seasonality. And then we had not a full alignment of probability. It was kind of like a up down move, which made it a high risk trade. But overall, what we saw is the move didn't hold for long. The hop didn't hold for long. It literally raided everybody and came all the way down. So the people that bought, for example, holding their gold position for a long time, took that back and then started going back down, as we have already anticipated. Okay, so if everything else goes good, gold should keep falling. But I can't really predict that 100% because of the scenario that's happening currently in Ukraine. You know, things are changing up. They're already sitting down for negotiation. They've agreed to sit down for negotiation, but there is, you know, there is that option that it's going to still escalate further. It's going to be a long-term war. So on that note, I can't really say much about, you know, what's going to happen with gold, but we can keep an eye on it. But it will be something very, very risky. It'll be on a super risky level to trade. Okay, well, our consensus still stays short till the second. So that's that with gold. Does anybody have any questions in regards to gold or in regards to any trade that was pointed out last week? I can't remember which of the trades I gave on the chat room last week, but these are all my alignments for last week. And if I'm not mistaken, most of it happened because I did make quite a lot of profit from that, but I don't really want to go too much into my own, you know, my own personal trade. So I had a few short right there. I collected a few money before that backed all the way up, and I collected from USD JPY as well. Let me just look at that. So wait, let me see. So USD JPY on the 22nd, I was meant to go short. So I probably went short here, but that didn't happen. Probably I got kicked out of that trade. I can't remember. CAD JPY, let me see where that is. So yeah, so I probably took some trade off here from CAD, and I had GBP JPY. I think that one actually did very good for me, that because I held that for a long time. GBP had a massive fall last week, which was already anticipated. So I did take a lot of chunk from this trade as well. So that's just to show a few of the trades that I had last week. So, and some are still ongoing. Some have already exited because of the pullback that's coming. On that note, I'm going to take this analysis off. And before I start today's analysis, does anyone have any questions? You can type it up in the chat so I can really go through that. And if you don't, I'll just jump into today's analysis. If you'd like me to jump into today's analysis, let me know what specific assets you want me to look into. Which asset do you want me to look into? I can only look into a few of them. I can't look into the entire broad spectrum because of the time. So we only have like, 29 minutes. So if you want me to look at a specific pair, a specific asset, let me know. Or alternatively, you want me to just run through the entire thing and see what might be available to us to look at. Okay. NASDAQ, right?
NASDAQ would be good.
Yeah, S&P 500, NASDAQ. Okay, right. The problem with the S&P 500 and NASDAQ is, I actually have S&P 500 loaded here on the screen, is we do not have the COT report, neither do we have the probability report for this. So it's going to be a very high risk trade. I'm not going to lie to you. It's going to be a high risk trade to literally go into, this specific asset. Now, that being said, I can still look into it, but I would not recommend trading it all out just based on seasonality. Same thing goes for NASDAQ. The last time we took NASDAQ, it went in our direction for a little while, then came against us because it's a high risk trade. We do not have the entire full scope. So someone says GBPUSD. I can look at GBPUSD off the bat, and then when we have a little bit of time, we're going to come back to NASDAQ and S&P 500. So let's look at GBP. Let's go first into GBP. Let's see what we can find on GBP right now. So the first things first, for the guys that have never been here before, that this is your first time joining, welcome guys. It's great having you along. What we do is we have a three-way system, which is system 1, COT report, COT, system 2, seasonality, right? 3, probability. And then we have the Williams. So basically, COT is basically looking at what the big banks are doing, big companies are doing, and piggybacking off their move. The seasonality is basically checking the season of the year in which the asset is meant to move in a specific region. So during Christmas time, price of cattle and price of chicken and turkey goes up. After Christmas, it drops. During Islamic period time, Ramadan, the price of cattle and ships and goats goes up. And after that period, it drops. And the same concept applies to the market. You just have to know when to ride it up and down. And probability is just a percentage of a win on specific days. And William is just like an indicator that shows us if we should go buy or if we go sell at specific days. It literally shows us if it's going to happen before the move happens, basically. So let's start off with GBP, and then I'm going to load up USD also by the side of that, and first see what we have on those two. Now, if we have a good alignment in terms of GBP, then we might have something, okay, might have something to go on. So on GBP, right, we know that GBP, it's long, right? They go long on GBP. And the main reason it's this, right? For the guys that have been here before, you know this, we look at the commercials. So the guys that are new, the only thing we look on the COT is the commercials. We look for the commercials. We look if they're going long or short. Longs means you should buy, short means you should sell, right? So the commercials right here, it shows us if they're investing their money in the buy. And as of the 22nd of February, what they're doing is they're going long on GBP. So GBP has dropped already and they're putting more positions in their buy. Now, based on this consensus, it doesn't mean that we should just jump in and buy GBP. You know, we have to look at the seasonality, probability, and also Williams and see if price aligns with that. If price aligns with any of those, with let's say seasonality and COT reports, the risk become high risk trade. Seasonality, probability, and COT, medium risk. Williams, including Williams, all four, we have a low risk trade, which is very good for us. What we're looking for is a low risk trade. So from the GBP now, what we can see is they're going long, they're buying positions into the long side, and that's good for us. So we can put that down as long. And now the next thing we check is the USD. USD is also buying long. The position is very, very small. What we look at also is the changes, guys. We just look at the changes over time. So they're putting 25 new positions there while taking 155 off the table. So it's not really a very good volume, but USD doesn't really give that much volume, you know, in terms of what the you know, these people do, because most of the people trading this are in the States, so they do have access. They already have ready-made access to USD anyway. So you know, they don't really need to pile on more positions. So when they need currencies from other countries, that's when they buy those currencies. So we're gonna look at, I'm gonna put that as a star next to it because the position is very small. So let me see, someone else told me to look at also AUDCAD. So I'm just going to load up AUD and also load up CAD in the same time. And I'm going to try to run through those analyses together with the time that we have, right? So if you're new, it's going to be very tough to keep up with me. I understand. You just have to watch the video back again. I promise you the strategy is quite simple. So the next thing we look at is AUD. What we can see is they're adding position to their long side, but also adding positions to their short side. But we see overall the short positions, you know, trumps over their long position, which means that AUD, we should be looking at short on AUD. Now, you know, AUD, we're going to be looking at short. Now, some of you might be wondering, why am I not looking at pairs like AUDCAD, AUDJPY? That's not how the tool works, you know. You have to bear with me. These are just future tools that we're looking at. We're looking at the future market, and we're going to use that to determine the Forex market, what's going to happen in the Forex market. So with the CAD, we don't have a direction. They're taking our position from the long and also they're short together. So that isn't much for us to do. And what other asset did someone tell me to look at? So I looked at AUDCAD, Euro, and then Euro CHF, Euro USD. So we've already powered down USD, so I haven't looked at Euro yet, and I haven't looked at CHF. So let's look at CHF and let's look at Euro. So we'll try to see what direction or what consensus people have on Euro and also on the Swiss franc. Let's see what consensus they have on those. And once we have that, I think I can start the other analysis in terms of seasonality and probability. So my goal here is just to find maybe one trade for you guys to look at, or maybe two trades, you know, to look at. For the rest of the guys, you know, that have the membership, you can always do analysis and find more trades to go into. It's taking its own time to load this time around. Let's just see. Euro GBP. Okay, no problem. I'll check Euro GBP. So Swiss franc, what we can see is they're adding positions to the long side, but adding positions also to the short side. It's very close. I will put that as long, but I'm going to start that also. CHF. Okay, and then Euro. So we go euro. Yeah, we go GBP. So for the euro GBP, I think we're just gonna go completely. Yeah, if you're a beginner, just stick with me. This is literally a very advanced way of trading. This is super advanced. So it's not I'm literally jumping you from what's it called, from a beginner to advanced trader in a second. So you guys are literally bypassing years of learning. Now, I know that most guys, when you join Telegram groups or stuff like that, you're going straight to the chart, start drawing support and resistance and all of that. We don't do that here. That's just long. We just look at the data. We look at the data that we have available, and then we make a consensus with that data to then determine what's going to happen in the market. So, I mean, we've looked at euro just right now. We can see there's selling power there. So the next thing to look at is if GBP is going I think my mic just cut out for a second. So if we have a long in the GBP there, we're gonna have a long also. Yeah, basically it's a massive shortcut. I remember when I started off, I was reading a lot of books and I was looking at EMAs and support and resistance when I started off. So didn't really pay out. I did lose a lot of money when I started till I found this. So with the GBP, we know that they're going long, right? Today's the 27th. We're currently right around here in GBP. Now, if seasonality for GBP is pointing short, so GBP is showing us on the seasonality that is meant to be going down. Around this time of the year, it's meant to be going down. And if you look at it from around the 23rd, 24th, what we can see is, let me go look for a GBP pair, for example. What we can see is GBP started going down around that period as well. So around the 23rd, you can see GBP already fallen, 24th. But what we can expect is the fall to continue for GBP. Now, because the COT report is telling us that we should go long on GBP and the seasonality is telling us to go short, we're going to have to take our GBP out of the equation, right? So we cannot trade GBP on this instant, okay? So, yeah, reading books is a lot. So the next thing is to look at USD. Let's go look at USD. Now, by looking at these assets individually, what is letting me, to do is it's letting me eliminate trades that I'm not meant to be inside of it, So if COT does not align with seasonality, I don't take that trade. Only when they align, that's when I stand the best chance of winning, You want to always stack the odds in your favor. So with the USD, what we can see right here, let me try to zoom in as well. Let me just zoom in. So what we can see right here on the USD is from the 28th, which is tomorrow, basically. USD should ideally move up. So we should see a buy move coming into USD. I mean, from the 5 years, it doesn't look that much, but from the 38 and 15 years, it looks like it's going to move up. So what we're going to do is, I know I did start this, but I'm still going to put USD right here as long. So now we have an asset that's pointing long also, which is good for us. Now, the next asset to look at on the list is AUD. Let's go look for AUD. Let's see if we have a long or short on AUD. All right. So let's see AUD short. So we're expecting that from 20 anytime right now. So currently right here, AUD, if we zoom in a little bit, we can see that AUD is actually meant to drop from around, the biggest drop comes from around the 7th of March. But from here, the 28th, for example, there should be a little bit of drop and then a consolidation. So if we look at the 5 years, it doesn't really look that much. It looks like price might be going up. So with the AUD, I wouldn't really call it short yet, but the asset might actually start falling from the 28th. So because of we have new guys right here and people that are very low, in terms of experience when it comes to trading, I would not call this trade. If you're a very professional trader and you know what you need to do, then you can just log into the site and then, analyze the rest of any AUD pair that you find that might be going short. So for that reason, because of the new guys, I'm going to take out, AUD out of the list, right? The next thing we look at is CHF, right? Now we're expecting CHF to have a long, and because I started, it doesn't really have that much, buying power in it. But if we can find a little bit of buying power, we might be okay to trade, the CHF for long as well. So we can trade it probably against any other assets that we find. So CHF right now, we are right on 24th, 20. All right, so 28th right here, CHF seems like it's gonna fall till around, it's meant to fall to around the 2nd or the 1st. So 2nd would be an ideal time, but the ideal time to go long on CHF will be the 6th. So I wouldn't want to risk this because of the choppiness that might be in play in CHF around this period, between the 1st and the 6th. But from the 6th upward, which should be, if I'm not mistaken, next week, Sunday, when we come back to analyze, next week, Sunday, when we come back to analyze on next week, Sunday, we might actually see a buy volume, a bigger buy volume coming to CHF, and then we can ride that trade. But for now, for the new guys, I'm taking this off the table. So, which leaves us with Euro. Now, fingers crossed, if we find Euro asset that goes short, then we found a trade that we can compare and contrast, because we already have USD going long. And if we have Euro going short, then we just need to check the probability and see if it aligns, so we can then do Euro USD, for example, we can trade that, we can short that trade. And as I said before, short means sell, guys. So for the guys that are very new. So currently we're right here. So we're gonna see Euro short to about the 2nd. But from the 2nd, Euro might start kicking back up. So if we look at that to 2nd, literally to Wednesday. So we have Monday to Wednesday to short this asset. And we're right somewhere around here. So we have 1, 2, 3. We have roughly about 3 days now. I don't really like trades like this because they're not that long-term trades. I prefer trades that have a longer lifespan. But for now, we can still trade that. So we're going to put Euro short. Now, you guys might be wondering, look, I've been doing analysis all the way through. I haven't even opened the chart for once. The main reason is most of the things that happen in the market does not happen on the chart. They happen, they literally happen on, what's it called? Behind the scenes. And you just have to be in tune with what's happening behind the scenes. So then you come to the chart to then transmute that, what you've learned from behind the scenes. So, and I know it's a lot of information to take in, guys. You just have to, if you do this once or twice, you would literally get it. It's literally quite easy. So the next step is the probability tool. So the probability tool shows us a percentage that we win. And ideally, I like 3 days in a row, or winning 3 days in a row for me to have, for me to feel more secure in that trade I'm about to take. So the next thing is Euro USD. We're going to check the date. So today's 27th. Now we want to check from the 28th, right, to see what's going to happen. Now, the first thing I see is on the 28th, I have a 56% chance of a short on the 28th. Then I have a 78% chance of a short on March the 1st. And then 67% chance going back up. Now, as I said before, I like 3 days straight, but we can still take this as a kind of a medium risk trade, and to see if we can find, a little bit of sell in that asset. So I'm just gonna quickly do this template, plain chart. So the next thing I want to look at is, let's go look at Euro USD currently right now. We know we want to sell this asset. Beautiful. Now this is Williams. Now Williams is a kind of a tool that lets me know what's going to happen in the market before it happens. So when price is dropping right here, Williams is going up, indicating there's a buy coming around the corner. And you can see the buy came. And then after that, there was a sell showing sell, which then the sell came. And then it showed a buy, but there was a quick raid up. Now it's dipping. The main thing is once price is dipping like this on the Williams, I should start expecting a short. Now from this trade, this Euro USD trade, for example, the first thing that I would notice right here is there is literally another block right here. Now there's a place, this part right here has resistance. And the next thing to notice is my EMA 20, 50, and 200. Look, 20 and 50 is right above, literally right here. Now, if I go on a 4-hour chart, look, price just literally broke through the 20, struggled a little bit, but broke through successfully. It's going for the 50, and price could go for the 200. So by looking at the chart, I know my entry will be somewhere around here and here. So I have an entry zone of about 35 pips, roughly 33 to 35 pips, right? My entry is going to be around this zone. I know a lot of people have entries that say, okay, go in at price at 1.12960. Nah, market don't work that way. Market has ranges, you know, so you have to find the ideal range for yourself. So market is pulling back right now. And the fact that it's pulling back right now reassures me that I should wait for price to come all the way back somewhere around here or here. Even ideally, I will wait for price to get to around the 50 moving average, expanding my range for about 39 pips, right? So with Williams now, I know probability is actually telling me short, Euro USD. And Williams is also telling me short. Now I'm going to start this for a second because we only have 2 days, and this is also telling me short, you know, Euro USD. So what I know is because I have 2 stars on that, I'm going to call this a medium risk trade, right? So with this trade, it's going to be a medium risk trade. We're going to short Euro USD starting from Monday, and we're going to exit before Wednesday, right? Your exit has to be before Wednesday, because when we look back at, you know, the probability we see on the 2nd, which should be on Wednesday, price is going to most likely pull up. And if I duplicate this screen for a second, and we go back to the Euro, seasonality, what we will see is on the 2nd, right around here, you can see price also looks as if it's going to go back up. So the maximum we're going to have is price coming here around this region, wait for price to come around that region, then you sell, you know, and then exit Tuesday evening before Wednesday, before price start pulling back against you. Okay. So that being said, now people might ask me like, okay, how do you do your stop loss and you take profit and everything? The next thing is to use ATR. So ATR is called the average true range. And I'm going to quickly delete this for a second. It normally has like you know, an indicator line going across. I don't need the line. All I need is this number right here. So it's telling me in the last 14 period, which is the last 14 days, you know, 14 trading days, price has moved 85 pips. The average of price in the last 14 days is 85 pips. So me knowing the average of price in the last 14 days is 85 pips, what I normally do is I go like maybe on 4-hour time frame, and I looked at it, it says 49 pips right here. So what I would do is ATR times 1.5 times 1.5, that would be my SL value. So my stop loss is ATR times 1.5. Now, if we do ATR times 1.5, which is 49 pips times 1.5, that should give us 73.5 pips SL value. Now, a lot of you might be like 73.5 pips is, you know, it's a lot of money to, or it's a lot of pips to commit. The honest truth is, nah, 150 pips is actually an ideal pips to commit for a stop loss. But if you can't afford that, then you have to be patient. If you can't afford like 73.5 pips, you know, for a stop loss, then you have to be extremely patient. So what you do is you wait for price to come to the maximum point that you can expect it to get to. And if price gets there, you can then go on a lower time frame, like a 1 hour, and you can see the ATR there is 25 pips, right? So if you do that ATR 25 pips times 1.5, you know, that should give you about 37.5 pips, which I think should be ideal for a stop loss. So which means your stop loss could be somewhere around here if you go in right here. Okay. Now your take profit, the way I do it for the beginners is to have 3 take profits. So you have TP1, TP1, TP2, and your TP3. So your TP1 will be exactly the same as your ATR value. Or if you want to play it safer, your TP1 can just be your ATR, whichever you choose. You know, if you want to be extremely safe, you go for ATR. Your TP2 should be 2 times your ATR value. You know, ATR, right? And your TP3, you let that run to your end date. So you let that run to your exit date, right? That's what your TP3 is going to be. Okay. So you have your SL will be this, your take profit will be split into 3 places. So you can have 3 positions if you want. Now, if you have a small size account, you have to trade accordingly with money management. You know, if you have an account of $100, for example, don't go more than 0.01. You know, if you have $200, just always go 0.02 maximum. You know, but if you have $1,000, you can afford to go 0.10 in the long run. You know, giving yourself about a space of 1,000 pips to, you know, to fluctuate. Now, if you have this 3 take profit and you have that stop loss there, I've already given you where your entry zone is going to be, then the rest is easy. You know the direction, you know where your stop loss would be, and your take profit will be. That's all you need, literally. So for this trade, Euro USD, we're going short. We're going short. I'm going to put it right here. Again, just to USD short, you know, from Monday, exit, max, Wednesday. So that's what we have for this trade. Euro USD, we go in on a Monday, we exit maximum on Wednesday. Okay. Exactly. Patience is key. So that's what we have for that trade. Now, to check more trades will be easy. I mean, the easiest way to check the rest of the trade is, since I know that you know, both aligns, USD align and Euro align, what I can also look for is I can look for USD. I can type USD right here and look for every USD assets that I can lay my hands on and check. Already check that one. And what I need to check now is the probability for each USD assets or each Euro assets. So I already know that I'm expecting USD to be strong, you know, just a little bit strong, not too much. So, and I can expect, you know, so it's telling me USD is going to be strong on the 28th, strong on the 1st, but goes down on the what's it called, on the 2nd. So one more thing, I just want to be sure about the USD entry date one more time on the seasonality. If I look at that, let's see. Yeah, so that's correct. So what I can also say is USDCHF, for example, can also be another trade. You know, so I can do USDCHF. And that would be a long, right? Same principle applies, you know. And then if I check, for example, USDJPY, and I see the same pattern, for example, so it says long right there, I have a long right there, and that same exact principle applies. So USDJPY, and they all fall under the same category of medium risk trade. So do you see it? Just by doing that analysis, I don't need to do more analysis. I know it's just copy and paste from that point on. Euro USD short, USDCHF long, USDJPY long, and I can keep going till I find, you know, till I find any assets that aligns with me. Now, if I find an asset that doesn't align, for example, I won't trade it. For example, GBPUSD is telling me to buy GBP at this date. So, and that, for that reason, GBPUSD is not a trade I like to take. Next one is USD, you know, USDCAD. It's a 50-50 on that day. I would not take that trade. You understand the gist? And literally, that's how you formulate it. So that's literally all I have time for today, guys. I've just showed you how the tool works, and we've been able to come out with 3 trades. Now, I didn't do any, you know, technical analysis for these ones for you guys, but, you know, you can do your technical analysis yourself. But with Euro USD, I've done the technical for you right there. And one thing you can notice is JPY COT. I haven't checked JPY COT. I don't know. Let me check. I can quickly check the JPY COT. But what you guys can see is I don't need to spend too much time on the chart doing, support and resistance, trend line, and all of that stuff. All I just need to do is just do what I need to do here, and every other asset will be open to me, to see. Now, this is JPY COT. It doesn't really have a long, neither does it have a short. They're taking our position from the long side and also from the short side. So that's it. So guys, does anyone have any quick question? NASDAQ, GBP. We don't have time for that. We literally have 2 minutes left. I can literally go and check NASDAQ for you, but keep in mind, guys, if you're new, do not trade NASDAQ. Trust me, this thing is high. It's high risk right now. So I can quickly just run through the NASDAQ seasonality for you and see what we can find on the NASDAQ seasonality. And just try to load that up. So
yeah, it was going down yesterday.
Yeah. So NASDAQ right here is 25, meant to go down till about 27. And then from 27, it picks back up. But keep in mind, because of the war, I'll be very, very careful. So that would be it. Mr. Isaiah, I cannot check GBP, JPY. We only have 1 minute, 35 seconds left. So for that reason, I can't really check that asset for now. But, if you have the membership, just log in and just walk through the analysis. You'll be able to find some trades to look into. So these are the trades I have time for today, guys. This will be on a special platform for you guys. I think it's medium risk trade, and it's sufficient enough for almost anyone to trade it. So that's all I have time for you today, guys. If you want to access the tool, you can always go on Telegram. It's pinned at the top on Telegram. The link to access the tool is right there on top. So you can always check it from there. It's only available for members, guys. So you can always access it from there. And if you have any questions, just get in contact with me on Telegram and I should be in touch. Okay, so happy trading, guys. Have a lovely week and stay safe, hopefully we don't have World War coming. Let's pray for that one, and we should all be fine. Wish you good luck, guys, and we'll catch you guys next weekend. Okay, take care, guys. Thank you for joining.
Okay, bye.
All right, take care.